Hey everyone, welcome in to a Daily Editorial here on the KE Report. There's a bit of a special Daily Editorial as Shad and I are going to more or less just recap these markets the day after the US election. Look, we've had a lot of calls move around on us in the last couple of weeks. A lot of people waiting for the election. A lot of people thinking there'd be a lot of uncertainty even after election day. Well, I think we can say that we actually have a lot more certainty than people thought as we're seeing the results roll in. It really does look like Trump is not only winning the overall presidency, but he's going to take the Senate, the House. He's even really dominating the popular vote right now. So I think what we are starting to see when it comes to markets is more of that uncertainty trade unwinding. Shad and I will more or less just recap what's going on in the markets, maybe look ahead to what trends we need to be paying attention to. So again, kind of a market wrap here, although we are recording this about an hour and 20 minutes before the close of the markets. Quick recap of these markets. Boy, oh boy, these broad averages are up big. The S&P, NASDAQ are up almost 3%. Dow is up almost 3.5%. The Russell is up 5.5%. We're also seeing the U.S. dollar up over 1.5%, over 105 on the index. And the 10-year yield is also closing in on 4.5%. The other winner also being Bitcoin, that is over $75,000. Look, clearly investors are confident about this election result, and they are pretty excited, it seems like, to have Trump as president. Shad, your thoughts? What are you taking away from these pretty extreme moves on the back of that election?
Yeah, it's pretty interesting to see that the markets responded positively. I think a lot of people expected that, and that Bitcoin responded positively, as did Ethereum, and really the whole crypto verse. A lot of people expected that, but people would have expected gold and silver to rally, and instead they've dropped. So it's interesting, the bifurcation there. As far as, I guess, more certainty being in the markets now, because at least we have a clear winner. I think what helped the markets do so well was that it's not going to be contested. That's not a really close race. It seems like it's a clear win for the Trump administration and for the Republicans kind of across the board. So with that comes more certainty on the policies. We know we're going to have trade tariffs. We know we're going to have an approach to deregulation in business, and it's generally seen as pro-business. You can also see the VIX selling down by 20% today. So a lot of people pulling off their hedges there because there's more certainty. That's my main takeaway.
Yeah, I would say on the precious metals front, I'm not overly surprised to see the precious metals down simply because, look, everyone thought this was going to be such a contested election, and now we have this certainty, and it seems like we have a president that is more pro-business. And look, gold, many factors driving gold, and I know inflation is something everyone will point to, saying that some of these tariffs, they're going to drive inflation higher, but there's a lot going on around the world, especially war-wise, that I think investors are thinking Trump might be able to put an end to, or at least slow down the escalation of war. And look, the precious metals are still doing well, but quite frankly, I don't know, Shad, like with the dollar doing better, with this more of a focus on, I think, U.S. dominance, that's what we're seeing in these market moves, that geopolitical fear, I think, is faded a little bit, at least today, and that's why gold's down.
Yeah, that's a good point, because Trump has said that day one he's going to stop the war in Ukraine and stop the war in Israel. I don't know how much of that is actually going to happen on day one, but I think he generally has a policy of anti-war stance that takes some geopolitical premium off the table in gold. Of course, there's still been a lot of central bank buying, and there's still been a lot of buying in the East. That'll probably continue. But even despite the pullback, gold and silver are still holding up well, but not a great thing for the gold and silver equities. I guess one of the things that I wonder about is there going to be such an interest in Bitcoin now and some of the cryptos that it steals a little bit of the thunder from gold. What do you think about the crypto trade being so positive? Because I think it's an all-time high today in Bitcoin, and it's up like 7%. Ethereum's up 9%. Do you think the cryptos are stealing some of gold's thunder?
I think in a certain extent, but I think this is a risk-on trade. Look at the Russell. That's up 5.5%. This is people exiting the sidelines and saying, this is better market-wise. There's maybe, and I don't know if this is going to be right long-term, but there's less fear out there right now because there is this clarity. And even looking at some of, let's say, like GDX, GDXJ, SIL, that chart is at least holding up better. But I know a lot of our listeners, right, very focused on the stocks, GDX, GDXJ, using those as a barometer. Those are some moves today that we need to watch closely, especially in GDX, because for the first time in months, we might have a lower low coming in for GDX. And that is after higher low, higher low, higher high, over and over again. There's a big gap in these charts. But again, just to be focused on the precious metals stocks, I think tomorrow's going to be a very important day. That's also when we get a Fed announcement, and then the follow through on that being Friday. That's the more the day where I find markets trend in a certain direction after the Fed. But man, this could be a perfect storm, I think, for risk on assets. If the Fed comes out with a 25 basis point hike already, with the Russell and small caps running that much, I think investors are just more celebrating, whether they're right or wrong, but moving into some of the riskier plays and simply bringing money off the sidelines.
Yeah, I agree. And if the Fed does cut by 25 basis points, the market's just going to have more nitro fuel. So it's definitely a market party. Do you think that affects when we start looking at those charts like the Dow gold ratio or the ratio of S&P to gold? Is this just another reason for generalist investors to snub the mining stocks? Because why would you want to be in them when the equities just keep ripping higher?
Yeah, unfortunately, I know these companies are making money, but as we know, just from what we see in the market, it's still a small market. And as much as a bunch of the bulls want to say we don't need market corrections, market collapses to bring in interest, history has shown that those do help bring in interest. Yes, precious metal stocks can get hit on the back of any sort of market collapse, but it does shift investors' focus. And quite frankly, look, these are the winning sectors. If you've had your money in the broad averages for any period of time, long-term time frame, you have done pretty well. And now even with Bitcoin starting to run again, it's a whole other sector that I think people are continuing to make money in. I'm not saying there's not opportunities in the metals stocks and commodities stocks, but we do still need to understand that's generally a small sector compared to the rest of the financial sector. Rest of the financial sectors continued to grow, and that is where a lot of, I think, money earners, those income earners in their 30s, 40s, 50s, continue to put a lot of money on. So in terms of those ratios, yeah, we're going to see a pretty big change in that ratio when you have something like the Dow up over 3% and gold down 1.5%. Not saying that ratio is breaking down, but it puts it in a whole new context, doesn't it?
Yeah, it's definitely something we're going to have to keep our eyes on. I don't think one day makes a market, but it just gives you kind of that idea that the market reaction on this decisive win is going to be a positive for the general equities market, and it hasn't been a huge boon for the precious metals. But I mean, I guess one thing I would consider on the mining stock side is that Trump has been big on deregulation, getting rid of the red tape, making it easier for permitting. So I wonder if U.S. gold and silver and critical minerals companies may actually be a beneficiary of some of that side of the equation, where on one side he may be hurting demand on some critical mineral side, but he's generally big on getting the business process moving. So I wonder if the permitting timelines for things in Arizona or Idaho or Nevada maybe move forward at a quicker pace. I wonder, do you think that could be a boon for U.S. mining stocks?
Yeah, I was thinking it would be. When I was going through the list of stocks that I follow, I was expecting some of these more advanced plays in the US, especially on the copper side, to potentially get a boost. I'm personally just not seeing that much today. I'm seeing a lot of flat moves. Yes, there's a lot of red on the screen, but outside of a couple stocks that are moving higher, I really would have thought that permitting window, at least investors on the sideline saying, hey, this could help these stocks, could open up that potential. Now, again, this is just one day of movement, but I'm just not seeing that. So maybe the focus will be on energy. We did see oil up initially today after opening the day down, but you look at something like XLE, the energy ETF, holy, that's up almost 4.5%. IEO, that is up over 5.5%. So I think investors, at least now, are more excited about deregulation, easier permitting in the oil sector than the metal sector.
Well, it brings up an interesting point. I've seen a couple people in articles weigh in on this topic and said actually, under Trump's administration last time, oil prices didn't do that great. If you think back to the 2016, 2017, 2018, 2019, that's when oil prices were in the gutter. And even though there was less regulation, because there was more production, the price of oil and nat gas actually plummeted. And then under the Biden administration, now granted, there's some geopolitical risk in there, but even before the war in Ukraine, there was a big rally in the oil and nat gas sector and the stocks that were related to that because of the inflationary concerns that were coming out of all the spending coming out of the pandemic, the reopening. But they just have made the point in a lot of these articles that Trump may be a drill baby drill guy, but that actually could drive the prices of oil and gas down. What do you think of that being kind of counterintuitive, that while people are excited about more oil and gas, the U.S. is already at record levels of production? Could this mean more production out of the U.S.?
Yeah, I think absolutely it will. But that being said, we always need to couch that with where the prices are. So if prices collapse, then we won't see that kind of growth. But yeah, I think we will see more production out of the U.S. I do find it interesting to go back to 2016, 2017, 2018, 2019, see what the markets did over those times as a historical reference. And you look at something like XLE went mostly sideways until 2020 when the world truly changed. GDX, you look at the gold stocks, those too also went mostly sideways through that time period up until 2019 when they started to break out higher. So maybe this could be a time where, yes, commodities, resources, they're around, but there's less of a focus on them because Trump is so pro-business, and the investors shift their focus to these growth sectors because, hey, that's also what deregulation helps with, is the fact that we could see more growth, whether good or bad. Maybe investors truly shift back to this growth mentality. It's, of course, impossible to know. We don't know what these new trends are, but any trends that you think could truly develop just from this one day of moves that, again, have been aggressive?
Well, I mean, I think the clear message is that equities are doing well, but I think another thing is that people look at Trump's tax policies, and he generally is for lower taxes and, in theory, reducing government spend, although we have not seen that in his previous term. But if there's lower taxes, I think a lot of investors feel like their need to do tax loss selling has maybe eased some, and that if we're not going to have those higher capital gains taxes on investing, which was part of the Harris administration plan, maybe it's safe to leave money in the market or even bring money in off the sidelines. I honestly think there was a lot of money on the sidelines coming into the markets today, and it's showing up in the indexes. It's showing up in the cryptos. I think it ties into the tax policies that Trump administration has, as well as a general pro-business mentality.
Absolutely. This could be, in a way, the perfect storm again for equities to make a whole other leg higher. And equities were doing very well under the last administration. It is one of those things, as much as people want to be bearish on these markets, fact of the matter is, when you have a pro-business president, that can be positive. Now, again, so much can happen around the world. This is all just so U.S. focused, but there's so much money in the U.S., and that could be timed with the Fed going through some interest rate cuts. Who knows if they're ever going to go back to printing money, at least in the near term. But fact of the matter is, right now, there is a lot of green on the screen for a wide range of sectors, at least from what I'm seeing. Even the financial sector, man, that's up over 5.5%. There's a lot of money being made today in markets in the U.S. on all sorts of different sectors, which kind of ties back to at least the precious metals aspect being maybe that fear trade is dissipating. Not that it'll go away, but at least in the near term, maybe it's going to be put on hold.
Yeah, I think that is dissipating on the geopolitical side, on the business side, and just the flat out uncertainty of what was going to happen. I think people expected this week to be fraught with back and forth and people not believing the election results. Again, since it was such a clear win, I think it takes a lot of that uncertainty off the table. So it's a green light for the markets. One other area, though, that I'd love to get your thoughts on, Cory, is the automotive sector. There has been a messaging from the Trump administration that he's not as huge of a fan of the EVs. I think that would have been a stronger push from the Inflation Reduction Act of the Biden and Harris administrations if that had continued. If there's more focus on manufacturing in the U.S. automakers on hybrids, I wonder if that underpins some of the forgotten metals like platinum and palladium still used in catalytic converters. They were thrown out for dead because everybody assumed things were switching over to just EVs. But if there's more hybrids, you kind of have that range anxiety gone, but you have still the need for internal combustion engines paired with batteries, but there's still that need for platinum and palladium. Do you think we could actually see a little life come back into that forgotten sector as people shift from EVs to hybrids?
Possibly. It's just a small sector. That's the thing. There could be some interest coming in there. Platinum's down 1% today. Palladium is down over 3% today. And you look at the car makers, GM is up almost 9% today. Ford is up almost 6% today. So clearly investors thinking that, yes, maybe the old school car manufacturers will do better under this Trump administration. Maybe it will filter down to some of these metals, but again, those are small sectors, and if people are distracted in making those kind of returns in bigger and more liquid areas, maybe they stick to them. I'm not saying that platinum and palladium can't go on a bit of a run here, but yeah, they're small sectors. There could be opportunities there, but just how much these car companies actually ramp up production, how much more cars are actually sold, that's still a big question mark in my eyes.
Well, I got another one for you, Cory, because you're in Canada, I'm in the US. We've actually talked a lot about the recent elections in Mexico, and one of the things coming up in the near term is the new trade agreement between Canada, the United States, and Mexico. A lot of people think it would have been friendlier under a Harris administration, and that maybe Trump's desire to tariff everything that's not US, more of a kind of a nationalist approach, may actually hurt Canada, may actually hurt Mexico for the desire to do nearshoring and friendshoring. Do you think this changes the domestic North American trade agreements between Canada, the United States, and Mexico having a Trump win?
Most likely. Yeah, we saw that's what happened last time Trump was in power. And look, in Canada, we still have the same leader, at least for now. And those two do not get along at all. Trudeau and Trump do not see eye to eye on anything. And Trump has already shown that he, in a way, will push Trudeau around. So, yeah, yes, from the Canadian standpoint, I don't think it's going to be any easier. Plus, maybe our dollar is going to keep going down when you see the strength in that U.S. dollar. And quite frankly, that's just what Trump is going to do. It's low-hanging fruit coming in and trying to fight for his country. It's what he ran on, and it's exactly what he did last time he was in power. I think out of any constant, that is the constant we are going to see, is Trump going after all kinds of other countries. Canada, Mexico are all going to be tied into that. There's no easy way out for these guys because the U.S. still is such a dominant power. As a U.S. citizen, though, Shad, do you want to see him go after these countries?
I personally don't, in the sense that I think it always boomerangs back and causes inflation for U.S. citizens. So if you put tariffs on China, if you put tariffs on Canadian goods and Mexican goods, we got to get the goods from somewhere. And then those countries will also put tariffs on U.S. goods. So if his desire is to onshore more manufacturing in the U.S., I think that other countries will just put tariffs on U.S. goods. But what it ultimately means is everything is going to cost more. So I think any way you slice it, this is going to be inflationary. And I guess from an inflationary standpoint, as someone that lives here and pays my bills here, I don't want to see more inflation. I guess that would help the precious metal side of things, but it would hurt people in their daily life. So my expectations are that these tariffs are going to come back and boomerang back on the American people, and we're just going to have higher priced goods and services.
Well, and that was the thing with his last presidency and really what came out of COVID. That was the big sticking point for me, is that yes, there was a lot of money printing, but there was a whole lot of supply chain disruption that caused goods prices to spike. And now we're seeing the follow through, especially in the US, everywhere, people wanting higher wages to keep up. That's a whole other inflationary pressure. I'm not in the camp that thinks we get inflation spiking back to 5, 6, 7%, albeit as long as we don't have any major wars, any other major catastrophes around the world. But I do think we stay somewhat elevated, maybe just above that 2% level. We'll see what these tariffs do. But again, if they're done correctly, then I don't think they have huge impacts all the time. But again, it's hard to predict what inflation is doing, but gone are the days when inflation hangs around 0% with 0% interest rates, I think. But I guess overall, wrapping up, any new trends in play, anything that you think really matters as we transition through the rest of this month into the rest of this year and as we get Trump back into office?
Well, I think we've covered a lot of it already with the US equities, with the crypto markets, and with commodities. But I think the strangest move that a lot of people were not expecting is the strength in the US dollar and what's happening in interest rates. And I think those drive a lot of other markets. I think they're a counterbalance to what happens in the markets. I'm surprised today that everything's up in the green pretty much, but the dollar is hurting the commodity complex. And a lot of forecasters, as well as I do, a lot of people who are being on the show are expecting the dollar to crash or the dollar to keep trending lower. And in a larger pattern, it has been. I guess the dollar at 105 today just was a little surprising to me. And if the dollar stays strong, I think Trump even wants the dollar to be weaker. But if U.S. is seen to be accelerating the business cycle, other countries' currencies have been actually selling off today on this news. So that's just going to underpin a stronger greenback. I guess that's one of the key takeaways I see from the day that I want to keep my eye on.
Yeah, for me, this is back to more U.S. dominance here. There's going to be somebody in power that is going to play very much hardball with a number of different countries. He's going to piss people off, but what is that going to do for the U.S. economy? And we always need to consider what other central banks are doing through all of this. Again, it is the leader of the largest country, largest economy in the world, but fact of the matter being, we'll see what he is able to do. It will be very interesting now that it really does look like he'll have the Senate and the House all together, all on one side. Boy, oh boy, we're entering a whole new world for the U.S. and for the world. And so far, markets are celebrating it very much a risk on and fear avoiding trade right now because just look at how much everything is moving. Well, Shad, good chatting with you. I'm glad we managed to get something up for today to cover these market moves. Everyone, weigh in. Let us know what you think. Share your thoughts in the comments section. Email us with your thoughts. And hey, we'll probably do a couple more of these as we maybe get some more outsized market move days. Everyone, thanks for tuning in. We'll be back with you tomorrow.